they confused it. But
Okay.
tweezer bottoms, this is how it looks. They were saying sellers were in control of the market, but then the buyers came and they are almost even or a little bit close above the open of the sellers, and then vice versa. Oh, they don't have one for tweezer tops, but this is the tweezer tops. Bulls were in control of the market. Okay, and then the sellers came and surprised them, closed below that open, and then reversal. So why is it a bullish reversal? All right. I don't even want to go into I'm gonna go back to that. um, all right, it says don't focus on the name of the candlestick. Try to understand the psychology behind its formation. This is most important. So you may hear railroads. This is called so many names, but the name does not matter. Just like how those dojis, the dragonfly doji, all that stuff, that the name does not matter. It's
Hmm.
the psychology behind it. It says because if you can understand why it's formed, you will understand what happened in the market, and you can easily predict the future movement price. All right. We don't have to go through this exercise. You've already been showing me that as far as like or what the candlesticks are, bullish haramis, bullish and bearish haramis, engulfings, and things like that. So you can go through that, but and I advise you to go through that just to train your eyes. But you
Okay.
don't have to go through it with me. Okay. All right, market structure. One of the most important skills that you would need as a trader is the ability to read market structure. It is critical skill that will allow you to use the right price action strategies in the right market condition. You're not going to trade all the markets the same way. You need to study how the markets move and how traders behave in the market. The market structure is study of the market behavior, and if you can master the skill, you will. And if you can master this skill when you open your chart, you will be able to answer these important questions: what the crowds are doing, who is in control of the market, buyers or sellers, what is the right time and place to enter or exit the market, and when you need to stay away. Um, though your price action analysis will experience three types of markets: trending markets, ranging markets, and choppy markets. In this chapter, you will learn how to identify every market and how to trade it. So we have trending markets. Trending markets are simply characterized by repeating patterns, higher highs in the uptrend, and lower highs and lower lows in a downtrend. Okay, uptrend, higher high, it's higher than the previous highs, and then higher lows. It's at the bottom. As you can see, market is series of higher highs and higher lows, which indicates that the market is trending up. You don't need indicators to decide if bullish or bearish, just a visual observation. And then there's that downtrend. Okay, trending markets are easy to identify. Don't try to complicate your analysis. Use your brain and see what the market is doing. If it is during series of higher highs and higher lows, it's simply an uptrend. Conversely, if it's making lower highs and lower lows, it's obviously a downtrend. According to statistics, trends are estimated to occur 30% of the time. You don't need to know that. So while they are in motion, you got to know how to take advantage of them. To determine whether a market is trending or not. Oh, I like this. You have to use bigger time frames such as the 4 hour, daily, and weekly time frames. Never try to use small time frames to determine the market structure. All right, so this should be easy. Identifying market structure. Um, said the best things are weekly. The best time frames to use is weekly, daily, or
The 4 hour, he said.
the 4 hour. Yes. Yeah, let's see what happened. Um, GU. Okay. I don't know. That was 5 minutes. Oh, a clear downtrend market right here. Okay, downtrend. Girl, I could have kept that. Let's just put it smaller than. All right. Lower highs and lower lows are being created in the market. This high is lower than this previous high. This high is lower than this previous high. This high is lower than this previous high. This low is actually lower than all of this lows right here. So it's lower than these previous lows. This low is lower than this low. This low is lower than this low. Uh, this low is lower than this low. I don't know if I did this one and this one, but that low is lower than that low. And then let me see if I can find an uptrend for you. Oh, that's on the weekly. Let's try the daily. Give us some more data. I try not to use current market structure because I feel like every time I try to do current market structure, it turns the other way after I do a teaching. And then it's just like, oh, Ramirez said it was this. And it really wasn't. And I'm like, yeah, it was, but the change of structure just changed.
Yeah, yeah.
So,
I wouldn't be okay deal like that because that's one thing I'm good at with the market structure.
okay, cool. All right,
Mhm.
cool. So this is kind of high. I guess
Right.
I could count that.
Yeah, you can. Yeah, I would count that.
Okay.
It's made a higher high than the last previous one. Yeah.
Yeah. So you know what market structure is. Higher highs, higher
Mhm.
lows. Uh, most people don't know about it, so I have to break it
Of course.
down, but
Oh yeah, I love the way you break it down though. You're doing good.
thank you.
Love it.
Thank you, thank you. All right, so how to trade trending markets. Okay. If you can identify a trend in market, it'll be easy for you to trade it. If it's bullish, you'll be looking for buying opportunity because you will have to trade with the trend. If the market is bearish, you'll have to look for selling opportunities. But the question is, what is the right time to enter a trending market? Trending markets are characterized by two important moves. The first move is called the impulsive move. The second one is called the retracement move. See the example below. Impulsive retracement. Okay, as you can see, the market is making higher highs and higher lows, which indicates a bullish market. If you see this market, you would think of buying, but as you can see, the market is making two different moves. The first move is an impulsive, and the second one is a pullback or retracement move or a corrective move. Professional traders understand how trending markets move. They always buy at the beginning of a impulsive move and take profits at the end of it. So if it's in an uptrend, they're buying at the beginning of those impulsive moves. I'm just highlighting something. But it's normally, and you can even look. This is a bullish Harami. Kind of looks like a morning star right here. Tweezer bottoms. Morning star. Mm, kind of a morning star, but you still have that bullish candle right here that you can get in. Uh, the reason why the market makes an impulsive move is the direction of the trend and retraces before it makes another impulsive move. If you're aware of how trending markets move, you will know that the best place to buy is at the beginning of an impulsive move. Traders who buy an uptrend at the market of the beginning of a retracement move, they get caught by professional traders and they don't understand why the market hit their stop loss before moving in the predicted direction. So basically, they're saying for those beginners, they're normally getting in, even for myself, I used to get in at the retracement move, hit my stop loss. I'll be mad because it went like this happened for me for months. I say at least like 6, 7 months. I was getting in at retracement like maybe even more than 6 or 7 months. I'm gonna be honest. It took me a minute. I was profiting sometimes, but it wasn't like as what I'm now, consistent now. At first it was like, what is you doing? I used to be like, what are you doing? I couldn't understand worth nothing either. Also, I couldn't really, I'm still trying to learn how to read candlesticks. It was a lot.
Okay, that's funny.
The illustration above shows a downtrend. As you can see, the best trading decision is to sell the market at the beginning of an impulsive move. If you try to sell the retracement move, you'll be trapped by the professional traders and you will lose your trade. Now we know how to identify downtrends and uptrends and how to differentiate between an impulsive move and a retracement move. This is very important for you as a price action trader to know. Yes, but the most important question is how to identify the beginning of an impulsive move to enter the market in the right time with professional traders and avoid being trapped by retracement moves. That is a great question. So here's that downtrend, impulsive move. That looks like we could see that's a bearish engulfing. This looks like an evening star. This looks like an evening star. Another evening, but bearish engulfing. I'm just highlighting the beginning of the impulsive moves. All right, it says to predict the beginning of the impulsive move in a trending market, you will have to master drawing support and resistance levels. So, what are support and resistance levels and how to draw them on the charts? This is what we'll see in the next chapter. How much do we have? I think we got time. I don't think I really be feeling like our times be fast too.
Yeah, be zooming. Yep.
Zooming, be zooming. For real. All right, so we could just try. I'm gonna get in. I don't even know where my Zoom is, but we can get in. So support and resistance levels. Support and resistance are proven areas where buyers and sellers find some of equilibrium. They are major turning points in the market. Some support and resistance levels are formed when price reverses and change direction. And price will often respect the support and resistance levels. In other words, they tend to contain price movement until, of course, price breaks through them. And trending market support and resistance are formed from swing points in the uptrend. The previous swing point acts as a support level, and in a downtrend, the old swing point acts as a resistance level. So it says, see the example below to learn more. So swing point, it acted as a support level here. Swing point, that's that top of that, that's the end of that impulsive move. So swing point acts as a support level. Swing point acts as a support level. Swing point acts as a support level. That's in an uptrend. Try to find this. Uh, okay, you been home, but okay. Okay, I'm in the mood. I'm in the meeting, guys. Uh, Let me actually do it like this instead. Uh, This is it's not gonna be textbook, textbook.
Right.
Let me see, but access and support. Okay, hold on. Let me just take this off. So these are really our swing points right here, here, and oh my drawing tool is not on. Oh my God. So these are our swing point, and it acts as a support. It broke structure right here, and then it came back and act as a support. So, like I said, it's not gonna be as textbook, but you can see the swing points act as a support. Um, here's our swing points. She finally came through and broke structure here, and it's not direct, like literally on the line, but these are our swing point areas. Oh wait, hold on. I need a box. I'm just gonna box all this up right here. And I probably need to color code it or something. I don't have swing points. I gotta probably do that now. Oh, swing point. Okay. I mean, no, those are supports. My red is my support. My blue or purple is my swing points. So swing point here. She did some craziness. Then acted as a support right here. So support area here, and then our swing point. I really don't know. Oh, I guess that's like a purple color. And then, so you got it?
You said got do yeah.
So
Mm-hmm.
okay, you can understand it.
From what you mapped out, how you mapped it out? Yeah, I think
Yeah.
that. Mm-hmm.
Okay. I can see if I could take a screenshot and then send it to you. Or
Okay.
you can always just go through in the in the in the book here.
Right. Mm-hmm. Okay.
Um, so this is how it looks in a downtrend. Impulsive moves. Let me see if I can try to find it. So she broke. Swing point. So this is our resistance level or the resistance. I need to do another. She didn't give us no retest right here. She just fell off the cliff.
Yeah.
So I
Jump.
gotta I gotta try to find something. Uh She repeated the pattern from all right here. So, yeah, let me just do all my swing points then. I mean, oh, she got small right here, and then she consolidated it down. Maybe one more we can do right here. And these would just be my areas of resistance level. Um, well,
Hmm.
yeah. All right, and I think I had those are purple. All right, swing points. The resistance swing point then act as a resistant swing point. So they're swinging from the wicks here or where those wicks are, acting as a resistance. And then it's another swing point. So swing point here, resistance here, swing point here, resistance here, swing point resistance, swing point resistance, swing point, and then our resistance. Um, this could be something. It's just a small little wick right here. This two swing point, and then resistance right here. She does small little pullback. I actually like those. Screenshot it. Oh dang, I need to do it on my phone because I don't have Telegram on my laptop yet. So I'm gonna do it on my phone and also be clear. I'll do it one uptrend, one downtrend and send it that way.
Okay.
Okay. Same thing. Illustration shows us market respects the resistance levels. Market makes an impulsive move. You understand how price actions are in a trending market, and when you predict with high accuracy what the next impulsive move will begin. Another way to catch the beginning of an impulsive move is by drawing trend lines. This is another technical skill that you have to learn if you want to identify key linear support and resistance level. Let me explain you first. What do trend lines mean? Quite often, when the market is on the move, making newer swing highs and lows, price will tend to respect linear level, which is identified as a trend line. Bullish markets will tend to create linear support levels, and bearish markets will form a linear resistance level. So we'll talk in our next one, trend lines. Let me go back to page 2.
Okay.
All right, so we did a couple of things. We did the tweezer tops and bottoms, how to trade trending markets, and then support and resistance level. Next thing would be to draw trend lines. Trend lines are really easy. We just didn't have we just didn't have enough time for the trend lines, but it's literally like I don't have a well, of course it'll be a little bit better, but like something like this. These are literally trend lines until it finally breaks. This acts as a support. This acts as the resistance. But they'll talk more into that. We'll go into more into that, but it's gonna be really easy. and then ranging markets. And then we got the good stuff coming up on how to trade these. So your homework is to, of course, you already know about how to do trend lines. I mean, how to identify trending markets, uptrends and downtrends, higher highs and higher lows. That won't be your homework. What I do want to see is these support and resistance levels. And if you can highlight the swing points from swing point to resistance, swing point to support levels.
The impulse move, the beginning of the
Yep.
impulse. Okay.
Yep. So yeah, where you will where's your swing points and the support levels or resistance levels. Yep. So I didn't. So you already know about the impulsive move. The same thing with the uptrend, but where we just went through and how I did this example,
Yeah.
this is what I'm looking for.
Okay.
So that would be your homework. This is what I'm really focusing on, like, because
Okay.
this is and the important thing.
Okay.
All right. So, support and resistance. I don't care how many charts you send me. I don't care. Load me up. I do want to give you some time to do this.
Okay.
So I
Cool.
want to follow up with you next week. We can do next week Monday. Hold on, let me see. What day is that? The 5th. Okay, I should be back. 3, 4. I should be back from Texas on the 5th. That's Cinco de Mayo. Let's do the 6th. It is Cinco de Mayo. I'm not gonna lie. I'm Mexican in heart.
Now, you know what? You funny the heck. We could. So wait, the six. Let me see. You're funny. Um.
May 6th. So that's a Tuesday. And then we can always change it if you need to.
Okay.
Uh,
Cool.
but that gives you a week and like a week and a day if I well, it gives you some time because support and resistance and try to identify those swing points. That's what you going like. That's gonna help with entries and exits. This is so I want you to take your time on this. If you want to highlight, hey, this is a bullish engulfing or harami. If you want to identify those with your swing points, that's even better. But this is what I'm looking for. This example, because this is gonna help you. This gonna help everybody with how to identify when to get in and when to get out of the market.
Okay. Good. Sweet.
Okay. Yeah, this is good. All right, so that's all that I have for you. I don't know if
Uh,
we about to hang
great.
up, but did
Yeah.
you
About to
have
hang
any
up. Yeah.
questions?
No. I'm good. I appreciate you.
Yeah, all right, all right. Well, you enjoy the rest of your day.
You too now.
Okay, bye bye.
Peace.